Okay, everybody. Good morning, everyone. Good morning. Good morning. Hope you all doing well. Happy Halloween. Happy Friday. Wonderful day. Halloween. If you have families, hope you guys have a great time tonight. We plan on trick or treating. It's not as big over here in Latvia, but we go for it. I want to revisit gold. Been on this theme a little bit this week. Also had a good spaces yesterday on Twitter with Sminston and some other folks. I sort of kept revisiting this thesis of Bitcoin relative to gold. Obviously, Peter Schiff is still in heaven, as Bitcoin is kind of stagnant. Gold is mostly going up. So we have this channel, all right, all-time channel, all right. And what this says is, if you look at where gold has gone from the first time it really ever floated in the history of mankind, from under $42 an ounce, $35 an ounce officially, but remember it was losing value already from the 60s. I start this in 71 August, but what these red lines show, all right, so the trend is here, 5.3% CAGR, not amazing. What the red lines show is at any given time relative to the trend at the time, which is an important caveat. That's why you see these sort of wavy bands and not straight lines. The price of gold was never below 0.46x the trend line and never above 2.54x the trend line. All right. So it takes a while to shake out and form a good looking channel that can move into the future. And it does move pretty well into the future here. Looks pretty good. These are the absolute extremes relative to the trend at the time. This didn't exist at the time. It was more, you just have to imagine. I could show the evolving trend, but it's always too many lines on these charts. So just imagine the trend line is between these bands, and then moving on to the future, this is how it looks. So we're well above trend, right? We're just well above trend. Peter Schiff loves it. We're not historically at the max, though, from all the data that we have. So we'll have to see. We'll have to see. We might pass that max. And then if you want to go crazy, right, give Peter Schiff his trend line. We got this incredible over the last 2 years, right? This is the best fitting trend line, 97% CAGR, 41%, 97% R squared, 97% R squared, 41% CAGR, this black line. Set to pass on the outside of the channel I just told you about by next year. All right. And you can even draw channels of that very tight. Doesn't really matter at the moment, but that's what it is. Let's even take off the channels just to leave the trend line. This would be an incredible change. It's more for effect. It's not. I'm 99% sure it's not going to happen. It could go outside of this channel, but it's not going to go up at 41% CAGR forever. And I'll try to explain that more now. Okay. So the biggest buyers of gold in the world are central banks. And it's been a while since I dusted off the gold reserves holdings from central banks and treasuries around the world, governments basically. Mostly Um, Mostly held by central banks, in fact. Although the Treasury, for obvious reasons, for the older governments, for the more established governments, holds a little bit of gold in the case of the United States. I think the United Kingdom has one bar in the Treasury. The rest is in the central bank. Um, World Gold Council counts up both together as official government holdings. So let's look at the total holdings over time, and let's see if the increase in government holdings can justify this price boom. That's what I want to determine. All right. I'm going to go back to 1999 because I could backfill this with better data, but I don't have it at the moment. I'll show you why in a second. So only 1999. Here's the U.S. government. About 261 million ounces of gold. This number hasn't changed really since the 70s. Okay. And as we know, from August 1971, the United States has not honored any. Well, they have honored redemptions of gold, but they haven't honored that relative to the dollar. So if you want to reclaim your gold, as Germany did in the 2000s and 2010s, you can. It'll take a long time. But governments are reshoring their gold reserves slowly and slowly. 80% of the world's gold after even the first year of World War II was in the United States. All right, so it was actually Hitler and Stalin which really had the most impact of a dollar standard. Gold fled Europe and went to the United States. 80% of world gold reserves were in the United States by 1940, including Polish gold, which was an amazing story. Actually, Polish gold was with the French in northern Africa for a while, but even before the end of the war, it made it to New York. And the Polish gold story is, if you haven't heard me talk about it, it's one of the best stories ever. Read Chasing Gold by George Tabor. Chasing Gold by George Tabor. So the weird thing about the United States' gold is they don't value it mark to market. They value it at $42 an ounce, the last statutory rate. They do that so they leave room on the Federal Reserve's balance sheet to buy treasuries. They want the dollar itself to be sort of the world reserve asset, not necessarily gold. All right. So who has should I say, maybe you think this is the largest, and you already can see there by the number 2, is this the largest stock of gold in the world? First of all, there's World Gold Council, which, sorry, not World Gold Council, but GATA, Gold Antitrust Action Committee. There's a lot of conspiracy theories. Do they have the gold? Is it not? Has it been leased out? Alan Greenspan in the 90s said central banks stand by ready to sell gold should the price rise. It's possible that the United States just has a receivable and not necessarily the asset itself on its balance sheet, but they just count it as gold. It's murky. For a transparent, sound money, it's murky. One thing we can be sure of, though, is the United States does not hold the most. The most is held in Europe. All right. I'm starting this chart because Europe started in 1999, the euro itself. So including the European Central Bank and all the European governments that are in the euro area, not the European Union, but those that use the euro, they have more, 346 million ounces. All right. Now you notice from the GFC until now, Western governments have not increased the 2 biggest Western blocs have not increased their purchases of gold. And you remember me saying even Gordon Brown sold gold. somewhere here when the gold price was bottoming. Great move for the UK. Let's go up the list now, okay? IMF, which also is indirectly controlled by the United States, has the next biggest stockpile, 90 million ounces. By the way, I really don't like tons. I know everybody uses tons in the World Gold Council, but the price is per ounce. So it's just easier, in my view, to talk about ounces. Although that's hard if I want quick snapshots because I still have to think in tons. Which is what, like 32,150 ounces. I'm just looking right now. Okay. Next is Russia. Russia is famously suffering financially right now, but if you just look at them alone from the GFC, it's 16 million ounces. They went up, by a factor of 5, right? Can't do that quick math in my head. 4.7. Notice how they haven't been buying since the invasion of Ukraine. And also their reserves have been seized, which are their ownership of Euro bonds primarily. And that will eventually go to pay for the reparations, which they should pay, but they'll never pay to Ukraine for invading that country. So Russia's not in a good spot, but this is what they've been doing. They thought they were building up a strong autocratic government. Next is China. Some big purchases here. And still purchasing. Now, I only go to March here. Unfortunately, kind of like the U.S. money supply, I can't get quite... I like to be exact with these figures, so can't get quite exact. But I'll come back to what it probably is now in the last 6 months, 7 months, since this chart ends, so don't worry. But anyway, China, Russia were obviously buyers. Who else was a buyer? India. Big purchase here. Up to 28 million ounces. Now let's look at Switzerland. I didn't look at them yet. Switzerland came off. They were the last country off the gold standard in 2000. And they've gone down. Haven't done anything, just like the US and Europe since the GFC. And then Japan also made a purchase here in 2021. So obviously it's a story of East and West. Japan, they have their own issues, but India, China, Russia have been buyers. And since the GFC, except for Japan a little bit, but IMF, which is the US, Europe, have all been basically flat. All right, and then the rest of the world, how big is it? It's fairly large, 230 million ounces. The total you're going to get here, just in case you're curious, is 1.166 million ounces. I'll come back to this idea in a second, but it hasn't changed much, in fact, in the last 6 months. A little bit more. So if we look at this in total, where were we here? Around the GFC, where it was, in fact, the low. And you can clearly see we don't even need to draw trend lines, right? Like this was coming down. All-time high was, by the way, in like the 60s of governments owning gold. And this was the bottom before the GFC. Then it turned around. So the low here was about 963 million ounces right there. 963 million ounces. And now, as of this chart, March is 1.166. Sorry, not million, billion total. You see the millions for each country, but total was, it was 900 million here. 963. Here, 1.166 billion. And as of August, which is probably the best latest number, which still is not that recent, but that's how it is, 1.168 billion. But we see the gold price. Now I'm going to put this on the right axis in billions of dollars. All right. So here we go. This is the value of those reserves, this little bank icon here, this vault. So we're at $700 billion worth of government gold reserves right at the GFC, which was up. Gold bottomed in around here. All right, so it was only 300 billion. Then it was 700 billion. Then it went all the way up in 2011 to nearly 2 trillion. All right, 1,000 billion, 1.8 trillion dollars. Price went sideways, but now we have this action of the last 2 years. $3.6 trillion as of March, but I got the latest numbers, or roughly latest, through August. And based on today's price, somewhere like 4.7 trillion. It's a lot of cheddar for governments. This actually helps their fiscal situation. Okay. But the important thing to look at is the net buying of the ounces itself. All right, so I want to go now to a different chart. All right, so this is now, it's going to be in dollars. It shows you, now I'm showing you in dollars, same chart. All right, so the euros. And by the way, why does the European Union or the Eurozone countries have such a strong basket of gold? Because that was originally part of the idea, spearheaded by the Germans in the spirit of their memory of the Weimar Republic. Still, hyperinflation in Germany was a serious effect that destabilized Germany in the 20s and 30s. And so they said, for sure, if we're going to do a joint currency with you, Europe, you're going to have a portion of it in gold. So I think it's officially 10% now, is maybe 15% at some point. I don't know. Hasn't changed. Well, the the euros printed have changed. That would be interesting to show in another chart as well. I don't have that handy, but regardless, the value is they hold the most in the world, is the euro area. $1 trillion worth of gold. But now this is basically the inverse of this chart. So here I'm showing you ounces and then dollars in total. Now I'm going to show you dollars, but ounces in total. There we go. So this is what the number I want to show you. This black line. Look at that black line. That's in ounces, left-hand axis. Actually, I think I didn't change the axis there. That's incorrect. The tooltip's correct, but the axis is wrong. Sorry. This is ounces. This is now dollars. Anyway, look at the tooltip. Look at the tooltip. So 968 million, as I told you, was the low. Now 1.16 billion, but as of today, it's a little bit higher, 168 instead of 166. All right. But here's the question. If central bank buying of gold is really so bullish, so crazy, look at the black line now, which is actually here. This should be million ounces. I mirrored it without changing my axis. I'm going to have to do that on the fly. I hate that. If central bank buying is such an important factor in the rise of the gold price, well, how much has it been, even since the GFC? And unlike a lot of my specificity with my charts, I'm not going to do a trend line and show you exactly. Let's just run the PV, present value, future value analysis. So 963 million ounces in March 2009, 1.68 billion ounces now, which is a few months after this, right? This is March, 1.166. As of August, 1.168 or 169 billion ounces of gold in governments around the world. That's a 1.22% CAGR. 1.22% per year is the slope of this line. All right. Regardless of what the price is doing great. It's doing great for them, generally. It's actually helping their fiscal situation. But the slope of actual ounce buying is elevated. It's increasing, but it's not that incredible. So when I go back to this chart, which Peter Schiff would love, this trend line, and I ask myself, is a 40% year-on-year increase in the price of gold sustainable? I would say no. It's certainly not sustainable from the biggest buyers who don't have any money anyway and aren't buying so much. I mean, every government around the world is running a deficit. Fiscal deficit. So I don't think it's very apropos to say that this thing can continue on. Another thing, let's imagine, let's slap let's just take this off so you see exactly. Let's slap the number 2 price in, say, by 2030 of 20,000, all right, which is roughly, let's say, 5x higher. In 5 years, again, that's what a 41% CAGR would give you. What would that do to the U.S. position itself? And here I got to go to here, assuming they have the gold. All right. 800 billion times 5 turns into 4 trillion. That's possible. Possible that can occur. And by the way, I absolutely submit that, again, let's look at the long here. We could test this. Right? We haven't hit it yet, the 100th percentile, literally the max as far as gold has done over its all-time trend. We could absolutely test this again. We could break through it. But the longer you go out on this curve, the more, because of the power of compounding, this gets kind of absurd really quick. So at $20,000 gold in 5 years, if that happens, if this trend line is correct and stays the same, which again, I'm doubting highly, that would take the U.S. gold holdings to 4 trillion, assuming they have all the gold. Now let's look at the power of compounding, and let's go out just a couple more years. 2 more years, we get to 30,000. All right, that's going to take it to 6 trillion. A couple more years. Not even a couple more years, a couple more months. Look at that. From 30 in January 2032, a couple more months, we get to 40 in November 2032. All right, so by the way, what's 40? What's 40,000? Just on the U.S.'s portion. That takes you to $8 trillion worth of gold that the U.S. would hold. We were here, right? And then when would that double again? Here? By 2034? That would take you to $16 trillion. All during this time, the revenue for miners would be going crazy. And as I said, often in this channel, the cure for high prices is high prices. So if you have a market which on a trailing 12-month basis is usually about 100 million ounces, roughly 100 million ounces of gold. So at $1,000 gold, that's a $100 billion market. Now it's a $400 billion market, which is just incredible. I mean, it's a record for gold miners. Like, they're going crazy. They're loving life right now. This would now be 20 times that. So is that 3.2 trillion? Is that right? No, 8 trillion. 8 trillion. So when you get here, just to take again the absurdity. If you get to $80,000 gold within 10 years, that's an $8 trillion market. That's more than 7 times what the oil market is today. Is the gold market really going to be throwing off $8 trillion in cash from new coins? I doubt it. I think this can go for a while. You know, it's going to be interesting to see it when it passes the all-time trend. I think it can go for another year or two, even. But the numbers start to be so goofy. And as I say, I mean, high prices, the cure for high prices is higher prices if you're a consumer. Because other producers start seeing these crazy prices that you can get for selling a product, i.e. selling gold. You get a lot of jokers coming into the market. You get a lot of projects that weren't sustainable at lower prices. Perhaps it works, perhaps they don't. Doesn't last. Bitcoin, of course, is not susceptible to these supply-demand constraints because of the difficulty adjustment. But I have a hard time believing that within basically 10 years, no, not even, yeah, within 10 years, we can get to a figure that's 20 times higher than today. It seems a little bit too much. But we'll see. And again, this would be the, I got to change the, it's bothering me too much. I got to change the axes right now. Give me 1 second. Again, all reasons why I can't throw these slides up on my website too quick. It's just too many charts that I'm changing and making all the time. US dollars. Okay. That should work now. So again, this is the mirror. Here's, we're looking at million ounces on the left-hand side, dollars on the right, $1 billion. Now we're looking at the opposite. $1 billion on the left-hand side, million ounces on the right, getting up to $1.16. And the compound growth without having to worry about trend lines. The compound growth of this trend is 1.2% per year. Not much to write home about. For all you hear about governments buying gold and gold and gold and gold, it's not anything like this price trend, which is 40% per year, which is madness. All right, so again, this will give more, hopefully gives more clarity or understanding to this chart, which is like really an amazing sort of governor of sound money, and we'll see how it goes. But even with this gold strength, gold is still 3x lower in Bitcoin terms than it was 3 years ago. All right. December 2022, Bitcoin was $15,000-$16,000. Peter Zion was on Joe Rogan saying $17,000 overvalued. In gold ounces, it was only 9 ounces of gold for one Bitcoin. Now, even with the gold strength, 3 times. 3 times that value. I know we had an emotional day yesterday, I think, or at least, again, I'm usually sleeping through these in the American markets, but let me see if I can catch. Again, this is why I don't day trade, but got down to, we got 105, didn't we? 106. Now back to 110. We're as high as 115. Just going to have to see. But if we go to, good morning, MP. Good morning, Ansi. Thank you for listening. Good morning, Pan Beam. Yeah, I mean, that's what it comes down to, I think. The economics of gold just aren't favorable at the moment. Right? I mean, you're already 3x worse than you were just 3 years ago. It doesn't mean it can't go lower. It can always go lower. But statistically, we're already in the 20th, 30th percentile, which is super low. 0.45x the trend line. And then, if we come back to well, if you look at this, which I know has a lot of people worried right now, and a lot of these drops, especially this one, the market manipulation one, or whatever. I would say manipulation only happens when a government actor is seriously involved, and it's possible that a government actor was seriously involved here, but zoom out, look at this, just relax. Here are the bands, and we're still on trend. Could we drop to 80,000? Absolutely. Could we drop to 50,000? Anything's possible. Will we drop to, well, actually, I was going to say 50 actually is extremely low, right? It's 20th percentile. We rarely hit that. Let's look at all the times we hit it. We hit it here in our start of silly season, and we hit it here after scam, bankman, fraud. And then in the prior times, of course, we hit it, but we were sort of working ourselves into the current trend, so it's less interesting. So I have a hard time believing that gold continues to outperform. And by the way, if this reverts back to the mean, as I've said many times, if this 30 ounces of gold suddenly changes back to 60, then this is now on the 9. This doubles over the 90th percentile. We're at 250 ounces, or $250 per Bitcoin. So I think this as well should give us some comfort, at least being Bitcoiners, right? The growth of this curve without doing fancy percentiles, you can see it's nothing crazy. And it's grown like 4% in the last 6 months. So it's a little bit, but over the last, if you stretch this over 15 years, it's 1.2% per year. Not that fast. 1.2% per year. Now it seems, if we go in dollar terms, it seems like, great investment. I got no problem with gold in general. But as you're saying, Pen B, I mean, this is the number you're going to have to look at. You got to contend with Bitcoin being more and more valuable in terms of ounces of gold every 3 weeks. Remember what I talked about? It seems to be that every 3 weeks you add an ounce to this power curve. Every 3 weeks. I know we're off the curve, but it's 3 weeks. The number will increase 1 ounce. That's a strong trend. And if you look at this now in ounces terms, here's the dollars, but just look at it in ounces. It has definitely increased a lot, but here's Western countries and the IMF, which the U.S. owns, been completely flat, except for Japan a little bit here. Major Western countries. And then, are Eastern countries really going to influence the gold price that much? Yeah, they will. But Russia's about to go bankrupt here. Never say never. These guys can suffer. Russians suffer better than anyone in the world. Ukrainians are more resilient. Russians are good at suffering. We could be in for a shock if it comes to pass that the United States actually doesn't have all this gold, but that's a different discussion. You still have the Euro area, which for sure has it, and I just say that because I don't think you can get a conspiracy across 17 different central banks. So just look at there how big Europe is compared to India, China, and Russia. Brazil's further back. Is this gonna keep the gold market rising at 40% per year? The buying of India, China, and Russia? Oh, it's going to be interesting. This is going to be interesting. I learned on the spaces yesterday with Sminston that we're now past the averaged days when a peak occurs post-halving, which I didn't know that figure, but I guess it's, if you averaged out all the prior booms, right, relative to their halving, we've passed it. As of like yesterday or something, or I don't know, a couple days before. So my stance on these cycles aren't over until they're over is coming close to ending here. But if we look at APSK's cloud chart, I don't think we can count ourselves out yet from a pump. Where do you put it? This is his best one, I think. I need to make this one. All right, I still think, we're a few days away from the mean. That puts us at like start of December, maybe. The mean. I think we at least gotta not make conclusions until the end of the year. I would not make conclusions about this pump not happening. Doesn't mean I says it. Doesn't mean I think it absolutely 100% will happen. Just people are writing this off too soon. What do you guys think? By the way, the United States does not value the gold like this. This is market value. They do not value it there. So the Fed on the balance sheet values it at $42 an ounce. So if we go here, let's put it here. 261 million. They value it at 10 billion. So it's actually worth, if they have it, 816 billion. And on the Federal Reserve's balance sheet, it says asset gold $10.9 billion, which is hilarious. I definitely think that charade has to stop at some point. I know the Loomis plan to buy Bitcoin was somehow revalue the gold at market, then swap into Bitcoin. I don't know. It's a monumental change to value gold mark to market on the balance sheet. That's for sure. It's a big change. And then you still got to answer the question, like, if it's even there. So that's mostly what I wanted to show today. I want to get, what's the value? Hold on. Value of Bitcoin ETFs. Value of gold ETFs. Next thing I want to get is gold versus Bitcoin in the ETFs. 472 billion. Is gold back higher? Did we talk about this? It might be, yeah. So if this is true, again, I need to chart this out, but we're at 170 billion in Bitcoin ETFs. And gold, because of its insane performance over the last 2 years, is now at 472 billion. But Bitcoin was bigger for a little bit, I believe. I have to check, but this is another interesting thing to see. because these numbers are a lot closer than the market caps themselves, right? Bitcoin's, 1.5. Right, versus being 10% of gold's market cap. So I think that'll be the next one to chart to see, just to see how much this gold run has legs. I have a hard time. Let's look at, here's the other one I'm going to show. Again, we just have to eye it because I didn't chart it, but let's see how long it would take to retire the debt of the U.S. because the debt only grows at like 7% per year. So give me a second here. All right. So super round numbers. And I'm not going to show the gold because it's on a slower trend. We'll assume. All right, so U.S. Treasuries around like the other stuff. Bitcoin could pass 100 trillion in the start of the 2040s, maybe, if all trends stay the same. But let's go back to the Peter Schiff chart, which is here. All right, so right now is 20 trillion. Actually, it's a little bit more to be exact. Let's throw it up. Right now, it's 24 trillion. 24. So that's our base. 24 trillion at these prices for gold, which is $4,000. So let's go to the Peter Schiff chart and let's go out to 2040. It just gets so insane. I didn't pull it out earlier. I didn't do the regression far enough out to show you how crazy it gets beyond 20. We only went to 2030, right? Which is like 20,000 gold. It's okay, but then by 2040, you get 461,000. So just for the fun of it, that's what. That's 115 times higher than today's price. Okay, you follow me? 461,000. Looking at number 2 here. What did I? Let's even do 500,000. 500,000. So 500 divided by 4 is 125. 125 times higher. All right, and 24 trillion is our base. I know it's hard to walk through these numbers, but let's go out now to 2040. Where was the 500 at? Sorry. Right there. March of 2040. All right, so now let's see how much the debt of, let's take out Bitcoin, but just March of 2040. The debt is projected to be 100 trillion. All right, it's fine. So now let's take 125 times 24. 24 is the current value of gold. So 125 times 24, 3 quadrillion. It's not happening. The numbers just blow off, right? So this is where the Peter Schiff trend just makes no sense. I mean, the U.S. would have long paid off their debt with the simple appreciation of gold price. It just wouldn't have happened. Like, this is why exponential trend lines are dangerous to rely on too much. They're unsustainable. Unlike a power curve, which is. Like here by 2030, it almost seems reasonable, all right? So that's a 5x increase. All right, so 5x. I know I'm doing total. Total gold. So it's not exactly central bank gold. It's another thing I guess I got to compare. But regardless, these are just insane numbers. We can do it with U.S. gold holdings. So U.S. gold reserves here, 816 billion. All right, 816 billion. Let's go back here. Let's look at the Peter Schiff chart. Let's assume by 2030 you get to 20,000. All right, so again, that's 5x higher in price. And then 5x higher on 800 and, what was it? 16 billion. 4 trillion. So that actually seems like kind of respectable by 2030. The U.S. debt. That actually seems possible. $4 trillion in the value of the U.S. gold holdings here, if gold continued at the current price of 40% per year. Because treasuries only grow at 7.5% CAGR. But you can see with the power of compounding, this just starts to look insane after 10 more years. Just off the chart. So it's not going to happen. But could we get to 20,000 in 5 years? Maybe. We'd blow through the old trend max regression here a year from now at 5.3 thousand. I need to chart out for you just so you can see what I've been doing in my head is extrapolating this value, the value of the United States gold reserves at Peter Schiff level price increases, which are just insane. But absolutely have been fact for the last 2 years. Look, it's a great trend line. 41% CAGR. And then plot that versus the treasuries. That's what I'm trying to show you. And point is, maybe by 2030, it's kind of reasonable. By 2035, it starts to, and certainly by 2040, it's, you got way more gold than even debt. It doesn't make any sense. My pleasure, KT. Thank you for watching. Thank you for watching. World gold in central banks, the biggest buyers, have only increased until today, by the way, or until like August, September, 1.2% per year. It means this sort of a boom is not sustainable. I need to give more figures to really, this is a question of probability, guys. This is the same as everything else. I'm not doing lines on charts. These are probabilities. The math is insane once you get out past 5 years. 20,000 gold, $20,000 gold in 5 years, maybe. Continuing on that path it starts to be goofy. And this is the most exciting chart. This is now my favorite chart, actually. We're just going to have to see. Maybe gold was asleep for 15 years, like genuinely. But as I've just tried to express, the buying is not any different than it was the last 15 years. It's the same rate. There's no spike in this black line. I think all roads lead to Bitcoin, right? If you're a gold bug and the price of gold does fall, the price of Bitcoin does fall to say even 20 ounces of gold by the end of the year, it's hard for me to see how you could turn down that opportunity. It's okay to be a pig. Don't be a hog. We'll see. Drama on Twitter as always for the fork wars or whatever. But looking at fees. Looking at miner revenue. I see nothing out of the ordinary as usual. So here's revenue. Again, we're just creeping. If you look at the number 3 here, we're just creeping higher than the prior all-time high. 17 trillion. Sorry, $17 billion a year. Remember, I just told you the gold market right now, they're just in la la land at $400 billion a year in revenue. A lot of old projects are starting up. People are excited. Bitcoin is just chugging along at the prior all-time high of miner revenue in dollar terms. Fees are showing nothing, like no spike. Right? All prior booms had a spike. This is probably the most, not bearish, but not bullish chart. Just like fees are just hanging out at, nearly nothing. I wouldn't say it's bearish. It's just, it's not a sign of a top. We don't even have these little spikes. The only times we had spikes was back to the halving and the JPEGs and people paying crazy amounts of money to get JPEGs on Bitcoin. Does this mean Wall Street is more involved? Controlling more coins? Probably yes. Probably yes. But volume also is pretty similar. Is anyone having a Malox moment? Is anybody worried? Again, just from a math perspective. Sorry. We haven't been here below the 40% for almost 2 years. Okay, you see there the 40% was at 40,600. The price was, no, actually, let's zoom in and find it. Right there. 40,400 is the 4. Price was 39.5. And if you want to not count that, you go back here. Basically a year ago. Or 2 years ago. 2 full years ago. So it seems to me even falling to the 4 is pretty low probability. Anything can happen, but even falling to 80,000, no matter what the chartists say, you know, if we generally extend over the line, then extend back down. Good morning, Slanik. You still got to work too, right? You working right now? Air traffic control. Have flights been bad generally? I saw there's a few more cancellations, but I was worried about flying to the U.S. A couple weeks ago. I'm glad I did at the time, but wasn't sure if it's been any harder. Yeah, can only imagine the Wednesday before Thanksgiving how this is going to look with nobody being paid. The chart I want to come back to you guys with is let's trend line out, assuming they have the gold, U.S. gold reserves at the Peter Schiff price trend line, which is insane relative to Treasury debt, the actual debt of the United States. That'll be interesting to see. That's going to show you the insanity of it all. And like I said, 2030 might be okay, but by 2035, you're starting, you know, at $115,000 gold. It just doesn't make any sense. We've already reset then. It would be funny if the Trump admin went back to bimetallism with gold and Bitcoin. It would be the biggest own goal ever. Trump loves gold. Trump loves gold. That's not a great growth rate for the gold reserves. It doesn't show me the demand is so high to keep this price going. I know I've talked around it 6 ways to Sunday, but It's possible we're reverting to a little bit of a faster trend than this. Right? It's possible we're, you know, instead of a 5.3% CAGR, we're going to pull ourselves up to a 6 or a 7, with this price rise. But look, just like Bitcoin, if a price extends above the trend, it doesn't stay there. Everything is a pendulum. And we just slingshot ourselves from one crazy valuation to the other. And even in Bitcoin, we do that, right? Even in Bitcoin. This is definitely odd, what's happening with Bitcoin too. We'll see. But with gold, I have a hard time seeing this Peter Schiff trend go more than 5 years. Good point. Good point. Good point. I have it for gold, by the way. But the latest baseline is not 2022, but 2008. But let's show you this first, and then we'll talk about that. It's a good point. Exponential growth does get faster. We do have more inventions. We do have the stair-step growth. Let's look here. All right. So I could draw a fifth trend line. I think it's too soon to tell, honestly. But just based on look at these rockets of value, and then they fall, go up. This is on log. So even when the price was fixed, right, it was still increasing. Increased here because of war, civil war, and increased here because of devaluation. So the 1800 trend was actually not exactly zero at the price of gold, even though it was pegged. 1914 trend as well wasn't zero. It was 1.4% CAGR. And then when we actually had free floating, let's take off this. We see this. Okay, so from 1971 to 2008, 3.5% CAGR. 2008 to now, 4.7%. I could draw a faster trend line here, but it seems too soon. It seems too soon. It seems too fast, too unsustainable. And by the way, if you're wondering why both of these are less than here, it's because this is all the way through. It collects all these higher highs in the 2010s. Lost my chart again as usual. Hold on. Where did I put it? Where did I just put that chart? Hold on. Here we go. So here, I got to label these probably better. This blue line stops calculating here. So I don't on the blue line I don't catch any of the high prices here, and actually here I don't catch any of the boom times here. So that's why you end up with two lower CAGRs than sort of the all-time of this period. Well, that's kind of an interesting fact too, right? 5.3%. All of these point to the fact that this just is this Peter Schiff trend. It's fun to draw, and I think it's illuminating. And I think it'll be interesting when we pass it, if and when we pass this boundary, because we're on track to. But it's too much. It just seems like too much of a Jeffrey West treadmill. Like just, it's not sustainable. But you're right to point that out. We could be on a higher treadmill, but it's not going to go from 4.7% to 40. Like that's just nothing else makes sense. Like the gold reserves don't make sense. Just too much. There's too much to play itself out, in my opinion. Isn't this fun? You guys having fun? I don't watch Peter Schiff at all anymore, but I'm curious if anybody knows and have heard what he's been saying about this run, because he's got to be happy. I'm embracing my inner Peter Schiff. It's gross to say. By drawing this trend line, I'm trying to help him as much as I can, help that idea. But a 41% CAGR is it's just insane. That's what Bitcoin's doing. Yeah. Right. So that's a good point. And this is also why I keep saying the power curve is the most important thing, way more important than economics. This is actually, I would say, proves my point, or not proves my point, but it illustrates what I've been trying to say. Is, I should just put a picture of Bitcoin across this chart, but it's the same thing. Here's the Fed's balance sheet. Let's just leave the last trend line. All right. And I count this crazy jump, right? So starting it here, I get all this. But even with getting all that, it's still a 9% CAGR. Again, is gold going to be 41% for a long time? Even with the craziest Fed money printing, it's only 9. All reasons why I don't think this lasts, this chart. But going to here, this would be illustrative to show the Bitcoin price, right? Like, so here, you could make an argument. This was the the end of QE3, and Bitcoin price was topping here. All right, but that was not the case in 2017. It's going down. It did align up. The stars aligned in 2021, right? For everything aligned in 2021. But it's not the case here. Just like you're saying, Slonic, it's not the case. We're going down in Fed balance sheet. So you can say of the past of the past 4 cycles, 2 were caught up with money printing, and 2, including this one, were not. So I don't actually put a lot of stock into the Fed's balance sheet or to interest rates or whatever, or Bitcoin as being some purchasing power savior. It's literally about the power curve. It's ground yourself in the power curve to make sense of it. I hope we have a pump. It would be fun. It could be real fun. We could revert this chart to the mean. Instead of 30 ounces of gold, we go back to 60, 70. And then boom, we're over the 9 here. That's 250K at least. And maybe it's both this cycle, by the way, as far as the QE goes. So we're ending QT, as you said. We go back into QE by December. Fed has said they're going to do that. Maybe by 2026, maybe we extend the cycle, but Fed is raising, trying to soften whatever jobs report or whatever. And then Bitcoin pumps as well while this is pumping again. Also possible. All I know is that probabilistically, this seems so low. We're going to have to start counting the number of days. That's the chart I need to show you guys. Is like, how often have we been under this 2? Here. Let's just say 2 months. Here a little bit. And then here for like 2 weeks. And then, crypto winter. It's not often. We could absolutely hit this. I mean, we touched it once. We could hit it. We could pierce through it. But do we stay there? That's my question. I don't think so. I think it's starting to be repetitive at this point, guys. So let me know if you want another chart. I'll probably end it soon. But my homework for you for the future or for next week, I want you to think about how really like normal the growth of the reserves are. It hasn't been abnormal. All right. In dollar terms, it's high, yeah. But in ounces, 1.2% per year. And that hasn't changed. So backing that into how much the U.S. stockpile of gold will be worth in 10 years is going to be interesting. I'll make that chart. And then, of course, compared to these trend lines. Even if we get to $20,000 gold at 10 years, it seems, unless we switch back to a gold standard or something, it seems very unlikely that 5 years after that we're at 117, and then the U.S. has basically paid back its debt with its gold holdings, which it might not even have. Also, I need to show you how much the gold mining industry is actually making at these prices. It's like, it would probably be more than any industry in the world. Right? Check me on my math here. We're at 400 billion right now. 100 million ounces roughly. Let's just assume that's the constant on ounces of gold that come out of the ground a year. At 1,000 ounces of gold, that's 100 billion. 4,000 ounces of gold, 400 billion. And I know you got to roll it. I'll get that chart as well. $10,000 per gold is $1 trillion. Now you're at the oil industry. And $100,000 per gold is 10 trillion. $10 trillion industry a year. Is that right? What is the AI industry revenue? So if gold continues at that price, it'll be 10 trillion by 2035. AI right now is 2 trillion. 2026. I don't know. Maybe gold just comes back and people forget about Bitcoin and that's it. And supply and demand factors don't factor in to the gold market. We'll see. I have a hard time believing it. These are the CAGRs that matter, right? 3.5%, 4.7%, or even 5%, right? Also possible. China, as we know, doesn't like Bitcoin, even though even they can't control what happens in their country with Bitcoin mining. And if they decide to revalue to a gold-based currency, how would that look in compared to a Bitcoin-based currency? To me, I come back to the same thing. It's more of the same. I don't think we're in the world of pegging anymore. No country wants to peg to the gold or Bitcoin price. So you want to print, you want to fill your deficit with printed money if you have the ability to. And if you're smart, you probably will buy some more Bitcoin or even more gold. But Bitcoin still has the way stronger base than this. Right? This is not that amazing of a growth rate. Certainly not to justify a 40% increase year on year in the price of gold when this is growing 1.2% per year since 2009, March. So I do think all roads lead to Bitcoin still. And this is going to be the most interesting chart over the next 6 months. We'll see. I think I'm going to leave it there, guys. Thank you as always for watching. Happy Halloween. Hope everybody has a wonderful time with your family and friends. And I'll catch you next week with some more charts and some new ones. I think it's going to be new charts most days now because I got a lot more data flowing in. All right, everybody. Thanks for watching. You too, Slanik. Thanks.